There's a moment every trader faces, a moment that splits your journey in two. Before it, you're chasing wins. After it, you're guarding your soul. For me, that moment came not with a big loss, but with a quiet one. The kind that doesn't make you angry, just numb. I remember staring at the screen as my stop got hit, watching the red number appear next to my open position. It wasn't catastrophic. It wasn't even dramatic. It was just another small hit, one of many. But that day, something inside me cracked because I realized that I had no idea how much risk I was really taking. I told myself I was disciplined, that I had a plan, but deep down I was gambling, hiding my recklessness under fancy trading terms like conviction and position sizing. And that's when I learned the truth. The market doesn't destroy you when you're wrong. It destroys you when you don't know how much being wrong will cost. Every trader loves to talk about profit potential. Nobody wants to talk about pain potential. But the professionals, the real ones, they live and breathe risk. They don't just calculate it, they befriend it. See, risk management isn't about avoiding losses. It's about creating a structure where losses can't kill you. It's about building a fortress strong enough to protect your confidence, because confidence is the real currency of trading. Once that's gone, you're no longer trading, you're surviving. I used to think risk management was boring. It felt mechanical, almost robotic, a list of rules that killed spontaneity. But I was wrong. Risk management is freedom, freedom from fear, freedom from obsession, freedom from the need to be right. Because when you know exactly how much you're willing to lose, the market can't manipulate your emotions anymore. You stop flinching at every tick. You stop praying when a trade goes red. You stop needing the market to behave. You start observing it. You start listening to it. And for the first time, you start thinking clearly. I remember reading about professional poker players who say the same thing. They don't play every hand, they fold most of them. But they never fold emotionally. That's what risk management is in trading, emotional folding, knowing when to walk away before the market forces you to. There's a quote I once wrote on a sticky note and stuck to my monitor. Risk management isn't what you do after a bad trade, it's what keeps the bad trade from breaking you. It took me years to understand that. I used to size my trades based on how confident I felt, not how much I could afford to lose. And that's dangerous because confidence in trading is a liar. You can be right 10 times in a row and start to believe you've cracked the code. You start increasing your size, pushing harder, bending the rules just a little, and the market, silent as ever, lets you dig your own grave. Then one day, boom, one oversized position, one bad move, and the market takes back everything it gave you with interest. That's when you realize that risk management isn't a technical skill. It's emotional maturity disguised as math because it takes humility to limit yourself when you're winning. It takes wisdom to admit you can be wrong even when you feel invincible, and it takes strength to walk away when greed tells you to push harder. The truth is, risk management is not about numbers. It's about respect. Respect for randomness, respect for uncertainty, respect for the market's power to humble anyone, no matter how smart or experienced they are. Every blown account is born from disrespect. Every disciplined trader is built on reverence. I remember one night I sat in front of my charts, exhausted. I had taken 5 trades that day, all small losses. My instinct told me to double down, to make it back. But something stopped me. I looked at my trading plan, saw the 1% rule written in bold letters, and closed my platform. The next morning, the market dropped hard. If I had taken that revenge trade, I would have lost 3 months of progress in a single day. That was the day I realized risk management isn't a limitation, it's a shield. It doesn't stop you from winning, it keeps you alive long enough to win. People say trading is war, but it's not about fighting the market, it's about surviving your own impulses. Your biggest enemy isn't volatility or fakeouts or stop hunts, it's you. The undisciplined version of you that lives for the thrill, that hates boredom, that thinks risk rules are for amateurs. That part of you is dangerous, and risk management is the weapon that keeps it under control. When I started truly applying risk rules, position sizing, stop placement, maximum daily loss, I noticed something strange. I didn't just lose less money, I lost less energy. The emotional roller coaster started to flatten out. My mood wasn't tied to my P&L anymore. And in that calm, I started to see the market more clearly. Because clarity doesn't come from knowing more indicators, it comes from having less chaos inside your head. And risk management gives you that peace. It's the silence between trades that lets you think straight. You can't learn that from charts or backtests. You learn it from pain, from over-leveraged nights staring at the ceiling, from that hollow feeling in your stomach when you realize you risked your rent money because you felt sure. That's the tuition every trader pays. But once you learn the lesson, you never unlearn it. Because the truth is, risk management isn't your prison guard. It's your best friend, the one that saves you from yourself. The funny thing about learning to manage risk is that it doesn't just change your trading, it changes the way you live. When I finally started respecting my limits, something inside me shifted. I used to think that success in trading meant breaking boundaries, taking bold bets, going all in, trusting your gut. That's what all the flashy social media traders preached: go big or go home. But the longer I stayed in this game, the more I realized the people who go big usually go home early, and the ones who survive, they go small, over and over again, until small turns into unstoppable. That's what risk management does. It removes the fantasy. It forces you to grow up. Because trading without a stop loss isn't bravery, it's immaturity. It's like driving 120 miles an hour with no seatbelt and calling it confidence. There's a point in every trader's journey where you stop wanting to look impressive and start wanting to be consistent. That's where I was, tired of emotional highs, tired of resets, tired of pretending that next time would be different. Risk management was my way out of chaos. And what's ironic is, at first, it felt like punishment. I remember my first month trading with strict rules. My entries were precise, my stops were mechanical, my position sizes were smaller than I liked. And I hated it. I felt trapped, like I'd taken all the fun out of trading. But somewhere around week 3, I noticed something I hadn't felt in months: calm. It was subtle, but it was there. I wasn't waking up anxious anymore. I wasn't refreshing my P&L every 5 minutes. I wasn't glued to every tick of the chart. I was finally detached. And that detachment was powerful because risk management doesn't just control your losses, it controls your mind. It removes the emotional noise that keeps you from seeing clearly. When you know your maximum risk, every trade becomes just one data point, not a make or break moment. That's when I understood the goal isn't to win every trade. The goal is to never lose so much that you can't come back. Every blown up trader you meet had one thing in common: they risked too much when they thought they couldn't lose. It's never the trade you expect that destroys you, it's the one you overbelieve in. I used to call it my conviction trade. But conviction, in the wrong dose, is poison. Conviction without risk management is ego dressed as courage, and ego has no stop loss. One of my mentors once told me something I'll never forget. The best traders are cowards in disguise. They assume they can be wrong, and that's what keeps them alive. At first, I laughed. Cowardice didn't sound like a compliment, but now I get it. Being cautious doesn't make you weak, it makes you wise, because the market rewards not those who believe the most, but those who survive the longest. Longevity is the strategy. That's why risk management is so underrated. It doesn't make headlines. It doesn't look glamorous. Nobody brags about only risking 1%. But that 1% rule, that's what keeps you in the game while others are blowing up accounts, chasing dopamine instead of discipline. I started seeing trading differently after that realization. Every time I placed a trade, I'd whisper to myself, protect the downside. Because when you protect the downside, the upside takes care of itself. And it's true. Once you stop bleeding capital, growth becomes inevitable, consistency compounds, confidence compounds, and before you know it, you're trading not from fear, but from flow. The market becomes a conversation, not a fight. That's what risk management does. It removes the panic from your system. You stop reacting to every candle like it's a personal attack. You stop trying to control outcomes you can't control. Because once you manage your risk, you manage your mind. And that shift, it's everything. I remember one day, I hit my daily loss limit, 2%. Normally, that would have sent me spiraling. I'd have sat there, angry, scrolling through setups, trying to make it back. But this time, I stopped. I shut down my platform, took a walk, made coffee. That evening, I reviewed my trades. I noticed something I'd never seen before. The losses weren't bad, they were normal. My strategy worked fine. The market was just choppy, and because I didn't force it, I preserved my mental capital. The next day, I caught two solid setups. I ended the week green. Not because I traded better, but because I didn't let one bad day become a disaster. That's the quiet power of risk management. It's not about making you win more, it's about keeping you sane long enough to keep learning. And that's the real secret. Because most traders don't fail from lack of intelligence. They fail because they can't emotionally handle losing. Risk management is the medicine that makes losses digestible. It gives structure to chaos. It gives boundaries to emotion. It gives rhythm to randomness. It's the friend who grabs your shoulder when you're about to do something stupid and says, don't. It's not worth it. And the more you listen to that voice, the more you realize the market isn't testing your technical skills, it's testing your emotional stability. Because in trading, control isn't about predicting the next candle, it's about controlling your response to it. And that's what risk management is: emotional control disguised as math. The stop loss isn't just a price level, it's a psychological boundary that separates discipline from disaster. You learn to love that little red line because it's not your enemy, it's your safety net. It's what lets you swing without fear. The moment you embrace that, trading stops feeling like war and starts feeling like strategy. You stop being a gambler trying to win. You become a strategist trying to endure. And in that endurance, something magical happens. You begin to find peace in uncertainty. Because when you respect risk, you stop needing the market to behave. You stop needing to be right. You start focusing on execution, on process, on presence. And that, ironically, is when you start winning, not by force, but by flow. There comes a point where you stop seeing risk management as a rule and start seeing it as a mirror, because it shows you who you really are when money's on the line. When I first began following strict risk limits, I thought I was being disciplined, but over time I realized I was still emotionally attached to every outcome. My stops were set, yes, but my ego still wanted to win. Every time a trade hit my stop, a small part of me flinched, as if I had been proven wrong as a person, not just as a trader. That's when I understood something that changed everything. Risk management doesn't just protect your account, it protects your identity. It separates your self-worth from your net worth. It forces you to detach your sense of value from your results, because until you do that, the market owns you. It controls your moods, your self-esteem, even how you treat the people around you. I've seen traders go from confident to broken in one bad week, not because they lost too much money, but because they lost too much of themselves. That's what unrestrained risk does. It doesn't just drain your balance, it erodes your peace. But when you start respecting your boundaries, when you know, this is how much I'll risk, this is where I'll exit, this is what I'll accept, something inside you relaxes. You begin to trust yourself again, because discipline, at its core, is a form of self-trust. It's you keeping promises to yourself when it would be easier to break them. And that trust is what rebuilds confidence, the quiet kind, not the ego-driven one that depends on a green P&L. It's funny how risk management, the thing I used to see as restrictive, became the thing that set me free. It gave me a framework to express skill without chaos. It gave me permission to lose without shame. And that's powerful because most traders are terrified of being wrong. They'll move stops, add to losers, rationalize bad trades, all because they can't emotionally accept defeat. But when you manage risk properly, you realize being wrong doesn't hurt anymore. It's just part of the rhythm. You take the loss, log it, move on. No emotional residue. And that emotional cleanliness, that's what allows consistency to bloom. Because consistency isn't about accuracy, it's about emotional neutrality. That's the paradox. The less you care about each outcome, the more accurate your decisions become, because you're no longer filtering reality through fear or greed. You're seeing the market for what it is, not what you need it to be. That's what risk management teaches you. It's not just math, it's mindfulness, it's awareness under pressure, it's the art of staying present in the face of uncertainty. I remember one trade vividly. Everything lined up perfectly. The setup was textbook. I entered, confident. Price moved in my favor, then reversed. My stop got hit. Precisely, almost mockingly. Before shooting back in my original direction, the old me would have exploded, thrown something, cursed the market, cursed the stop, cursed everything. But that day, I just sat there, quiet. I felt the sting, but it didn't shake me because I knew I had done everything right. The risk was managed, the process was sound, the outcome didn't define me, and that's when it hit me. Risk management doesn't guarantee profit, it guarantees peace. That peace, that calm in chaos, that's the real edge. Because when everyone else is panicking, chasing, overtrading, you're steady, you're patient, you're selective. You realize that trading isn't about controlling the market, it's about controlling exposure. You can't control whether a trade wins, but you can always control how much it costs you when it loses. And that one truth shifts everything. Once you internalize it, the obsession with being right fades away. You stop asking, will this trade work? And start asking, if it doesn't, am I safe? That's the question that separates professionals from gamblers, because professionals don't need every trade to work. They just need to stay solvent long enough to let probability play out. And the longer you stay in the game, the more the math starts working in your favor. That's the irony. The traders who obsess over winning end up losing faster. The ones who obsess over survival end up winning in the long run. I used to think trading was about aggression, striking fast, taking chances, catching big moves. Now I see it's about endurance, staying calm, staying consistent, staying in control of your capital and your mind. That's what risk management really is. It's endurance training for your emotions. It teaches you patience. It teaches you humility. It teaches you to wait for your moment instead of forcing it. Because if you manage risk, you can afford to wait. You can afford to skip mediocre setups. You can afford to sit out choppy days. You can afford to breathe. And in that breathing space, trading becomes a craft again. Not a gamble, not a chase, but a practice of awareness and restraint. I stopped thinking of risk management as the brakes on my performance. I started seeing it as the steering wheel. Without it, speed only leads to crashes. That's the quiet irony of the market. The ones who protect their downside are the only ones who ever get to see the upside. Because there's no freedom in trading recklessly. Freedom lives in control. And risk management is control made visible. It's the invisible discipline behind every overnight success. It's the unspoken wisdom behind every long-term survivor. When people ask me what changed everything for me, what turned chaos into clarity, I tell them this. It wasn't a new strategy. It wasn't a new indicator. It was the moment I stopped trying to avoid risk and started partnering with it. because when you treat risk like a friend, one that tells you the truth even when it hurts, you start to trade differently. You start to live differently. You stop fearing losses because you understand their purpose. You stop fighting the market because you respect its rhythm. And slowly, the game transforms from something you endure to something you flow with. That's when trading stops being just a way to make money and starts becoming a path to mastery. There's a strange calm that settles in once you truly accept risk. It's not the kind of calm that comes from certainty, it's the calm of surrender, not to defeat, but to reality, because at some point you realize that risk was never the enemy. It was the teacher, the one trying to show you that you were never in control of the market, only yourself. For years, I fought that truth. I wanted to master every chart pattern, every indicator, every psychological trick. I thought if I could just predict the market better, I'd eliminate the pain. But no matter how much I studied, the pain always came back. Different form, same lesson. It took me a long time to understand that pain in trading isn't punishment, it's feedback, and risk management is the translator. It helps you interpret that feedback without destroying yourself in the process. Once I began to see it that way, everything slowed down. My trades became cleaner, my expectations lighter, my emotions quieter. There was a peace in knowing exactly how much I could lose, a strange kind of freedom in having limits. Because limits don't cage you, they define the space where you can safely express your skill, like the boundaries of a canvas for an artist. Without them, there's no structure to create within. Risk management gives your trading that structure. It turns chaos into a craft, and that's when trading becomes beautiful again. Not the reckless, dopamine chasing kind of beauty, but the steady, mature beauty of patience, awareness, and control. You start seeing the market as a mirror, reflecting your discipline, your restraint, your clarity. Every loss becomes a reminder to stay humble. Every win becomes a test of whether you can remain grounded. And over time, risk management stops being something you do. It becomes something you are. You start applying it outside the charts. In conversations, you manage emotional risk. In relationships, you manage expectations. In life, you stop over leveraging your energy on things that drain you. Trading becomes a metaphor for living, one where preservation is the highest form of performance. I remember one day, a newer trader messaged me. He said, I keep blowing up my account. I don't understand. I study hard. I backtest. I journal. What am I missing? I told him, You're missing your best friend. He laughed. What do you mean? I said, Risk management. The friend that tells you when to stop. The one that doesn't flatter you, doesn't sugarcoat, doesn't care about your feelings, just your survival. Because that's what a true friend does, protects you from your own impulses. And that's what risk management is. It's the invisible presence that whispers, Enough for today. Don't chase. Live to trade another day. At first, it feels limiting. Then, it starts feeling like love. Because love, too, has boundaries. And those boundaries are what make it last. That's what I discovered about trading. It's not about domination, it's about partnership. You and the market are dance partners, and risk management is the rhythm that keeps you from stepping on your own feet. The moment you ignore that rhythm, the dance turns into chaos. But when you honor it, when you respect the tempo of loss and gain, you move in sync. That's where flow lives. There's a certain quiet magic in that state. When you stop overtrading, stop forcing outcomes, stop needing to control everything, you start to trust the process, and trust is the foundation of mastery. That's what makes professional traders look calm in volatility. It's not that they don't feel fear, it's that they've built trust through thousands of repetitions of doing the right thing under pressure. That's what risk management really trains: emotional endurance. Every time you follow your stop instead of moving it, you strengthen that endurance. Every time you size down after a loss instead of doubling up, you reinforce that trust. Every time you walk away after hitting your daily limit, you're proving to yourself that you can be relied upon. And that self reliability is worth more than any winning streak, because trading isn't just about growing your account, it's about growing you. And growth always requires restraint. Most traders want excitement, but mastery is quiet. It's not adrenaline, it's alignment. When I look back at my early years, I realized that the market wasn't trying to break me, it was trying to shape me. Every loss that felt unfair was actually training me to surrender. Every blown account was teaching me humility. Every rule I ignored was a reminder that freedom without structure is self destruction. Now, I no longer chase profits, I chase preservation, because preservation is progress, the kind that compounds quietly while others burn out chasing speed. And it's funny, the less I risk, the more I make. Not because the market changed, but because I did. That's the paradox of risk management. When you finally stop fighting for control, you gain it. When you stop chasing certainty, you find peace. When you stop fearing risk, you learn how to use it. Risk is not your enemy. It's the constant reminder that you're playing a game where control is an illusion and adaptation is everything. And once you understand that, trading stops being a battle and becomes a conversation, one between your discipline and the market's uncertainty. I think back to that first small loss that started it all, the one that cracked my ego but opened my awareness. If I could talk to my younger self, I'd tell him this: you'll lose money, yes, but the real loss is refusing to learn why. You'll fear risk at first, but one day, you'll see, risk was never there to hurt you. It was there to teach you balance. Because that's what risk management really is: balance in motion. It's the bridge between fear and freedom, the silent force that keeps you grounded when the market tempts you to drift. And over time, you stop seeing it as a rule book, you start seeing it as a companion, a presence that grows with you, evolves with you, protects you, even from yourself. So, yes, risk management is my best friend. Not because it guarantees success, but because it guarantees survival. And survival is what gives success a chance to exist. In the end, that's the real secret. You don't need to win every trade. You just need to stay in the game long enough to let your edge unfold. And the only way to do that is to treat risk not as something to avoid, but as someone to respect. Because the market doesn't reward the fearless, it rewards the ones who learn to fear wisely.